All right, traders, we have a phenomenal trading week ahead. We are going to be planning step by step how to trade both ways. I'm going to show you the best key levels to be scalping call options to go long and the best key levels to be scalping put options to go short. I'm going to show you how you can make both money trading this buy both ways heading into this week. We are currently trading at the high end of the channel, and there is going to be very lucrative short selling opportunities. Let's get straight into it, guys. So this is going to be a phenomenal week. As you know, we've been trading in this overall range from like 404 to 415 for about 2 weeks now. With that being said, we are now gapping up, approaching the higher end of the range. So this is what I want you to understand in terms of our key levels, guys. Again, this is going to be a very, very simple week. Last week was very simple. We did very, very well. This week should be even easier. So what I want you to understand is we are sitting towards major resistance on the SPY. And this is what you need to be aware of, right? So we have this major resistance level at 413.87. At 413.50, I ended up calling out put options within the group. I swayed away from puts the entire day. Once it hit our key resistance level, I ended up calling out put options, and those did fairly well. But with that being said, we already rejected. We rejected major resistance, which is bearish. We are towards the higher end of the channel. Now, in terms of some previous support levels that have been tested, let's go over this. So this is the 30-minute chart. You can see right here, SPY had some support at 415.30. Once it cracked that support, it went to 414.60, shot back up. Previous support reacted as the new top, the new resistance, and then it sold off hard. So you could see right here, your new previous support level is right around here. You could say it's 414.70, and you can also say it's 413.70, right around here. And it is still rejecting and reacting as a resistance level. It is consistently turning these key previous support levels on the 30-minute into a resistance level. And in terms of what can occur if history repeats itself, we can see a massive drop from this 414 level all the way down to about right here. This is where we can drop to about $409. This is going to be key. So the point I'm making is if the SPY continues to reject this 413 to 414 zone, we will sell off to overall $409. Now, for this to go to $409 and to truly flip bearish, so I'm already seeing some bearish confirmations, but to truly flip bearish, we need to crack the previous closing price from Friday, 412.63. So if you see 412.63 cracking, reacting as a resistance, then we're going to go to 411.80. If we crack 411.80, then we're going to go to 410.40. So see how I'm getting these support and resistance levels, right? I'm using the 30-minute. You can also use the 5-minute, right? But overall time frame is good for reading charts on the 30-minute. So the next level is below 412.63. We would go to 410.35. Under that, we go to $409, which is where I would not hold puts past $409, right? But the way I see this chart is I'm seeing a double top. I'm seeing a rejection. It looks bearish to me. To truly flip bearish, we just got to crack this like 411.60, and we just need to maintain resistance at 412.60. If we can maintain resistance at 412.60, we will continue to drop to our 409 level, right? So what are going to be the levels that we're targeting for puts? We're going to be looking at 412.63. 412.63 will be the level of interest where we are targeting puts. That's going to be our first level. Now, if the SPY breaks above that and forms a support level, it's going to go to 414. And if it breaks above 414, then it's going to go to 415-ish, right? So the point I'm making is if the SPY breaks above this, so see, look, right? So this right here, this is a bullish confirmation. This is a bullish confirmation right here. What does it do with this bullish wick on the 30-minute? It trends up. Well, this is the opposite. This is a bearish trend reversal candlestick right here towards that previous support, which is bearish. Then it sells off. This is that bearish candlestick right here. Then it starts to sell off, right? So if it does break above this 412.60 and 414 level, I will then look to hit puts at the new best price, which would be this gap to fill right here at $415.50. So what I'm telling you is our two levels of interest for puts, our lower level is going to be 412.63 if it reacts bearish, if we get bearish confirmations, if we're forming resistance at this level, we're going to be hitting puts and then scaling out on the drops 411.70 to 410. If it breaks above this, reacts bullish, or if we get stopped out, then our next level for put options is going to be towards the high end of the channel, literally the best price possible, you can say, $415.51. There's a gap to fill at 415.51. We also have a gap at 412.63. So if the SPY is showing signs of a gap close reversal, reacting bearish, forming a roof, forming a resistance level, those will be our levels of interest to target put options, right? Just don't get trapped. Just understand this will likely fall, but if it breaks above 412.60 and reacts bullish and forms like bullish hammers, this is a nice bullish hammer, this is a nice bullish wick, right? Then it's going to shoot up to 415. Don't get trapped holding hopes. So that's my put side agenda, 412.60 and 415.50. Those are the two levels that I'm going to be targeting put options. And again, the free fall level, so basically SPY is going to free fall if it just maintains under this level. If we just maintain under 414, there's not much support, man. It's going to start to free fall. Look what happens when it cracks 414. It's sold off hard all the way to 408. When it reacted as a resistance at 414 again, it's sold all the way off even lower at 403.74. And you have a gap to fill below at 405.13. So you better believe me, I'm going to be interested in targeting puts towards the 412 and 415 range with a tight stop. If I get stopped out, I don't get trapped, and then I wait for the next level where the bull trap will be created. If not 412.60, then 415. Now, let's discuss some call option plays. These are going to be some potential plays where we can look to buy call options. So this 408 level, there's actually a gap to fill at 408. This will be one of my levels where I'm going to do a quick scalp on call options. I'm going to be targeting call options right here at 408. There's a gap to fill at 408. That's going to be one of the levels where I'm targeting calls. You can see right here, a lot of support. Wow, this time it cracked support and it kept going bearish. Why is that? No green bullish 30-minute. Oh, this time it bottomed and didn't crack support. Why is that? Green bullish 30-minute trend reversal candle. Pay attention to the 30-minute candlesticks, right? So one of my levels to target calls is going to be at $408. Another level, and this would be the best level, right? So the lower levels are better for calls, the higher levels are better for puts. The lower level would be at 405.13, right? So I'm looking to trade these both ways. So understand, right now we're towards the high end of the channel. We're towards the top, not the exact top. It could be, but not. It might not be, but it likely will be. We'll see how it reacts, but I'm leaning super bearish at this level. But understand, we're targeting two gaps for puts, 412.63 and 415.50. So if we're in puts at 412.60 and it reacts bullish, it forms a floor and it starts breaking out, hits 413, we get stopped out. We don't hold it and then add at 415.50. We get stopped out and then we retarget our entry at 415.50 and make it all back and more, right? And same thing for calls. For calls, we're interested at $408 for a quick scalp to like 409, right? And then, from there, we retarget the lower gap at $405.13. So that's how we're planning to trade the SPY both ways. So in terms of the calls, we're looking for support. We're looking for consolidation. We're looking for bullish confirmations. In terms of the puts, we're looking for resistance. We're looking for a roof. We're looking for bearish confirmations. The way that I personally confirm if something's bullish or bearish, I see how it reacts. I use the candlesticks. I like using the 1-minute chart and the 30-minute chart. Those are my two go-tos. And I'm simply looking to see if it's forming a roof or a floor at this level. So if it touches our level, rejects, forms lower highs, forms resistance, then it's forming resistance. We short. If it touches our level, forms a floor, starts bouncing, then we can look to buy calls, right? So that is in a sense what we're doing, right? And this is how we were able to crush it last week. We called this out days in advance. to go heavy on calls at $404. It was the best support level at 404. There was a gap to fill, and surely enough, history repeated itself. SPY had a gap close reversal at 404, and it continues to go up. So we will continue to look for gap close reversals at 415.50 for puts, at 412.50 for puts, and then for calls, 408, and then go heavy on calls at 405.13, right? Very, very simple strategy, very, very simple game plan. We're going to be in and out scalping very, very quickly at these levels. And remember, if it's not reacting how you want it to and the trade starts to go against you, you must get stopped out quickly, because if it can't reverse and work at our levels, we get out. Because if 408 cracks and reacts as a resistance, we drop to 405, and I'm not holding through a 3-point drop. If 412.60 breaks out and reacts to support, we go to 415. It's no shock. It's no surprising. It's all within the chart. It's going to take a little time to get there, but that's where the overall direction will go if it breaks down and reacts as a floor, right? So instead of holding hopes, I just cut my loss and wait for the higher level. Or you can just wait for the highest level, and that's your best chance of succeeding. But use confirmations, man. It's more than levels, but obviously in terms of like, if I warrant to use a confirmation, I wouldn't be using any sort of confirmation at the best levels, which would be 415 for puts and 405 for calls. You should still use confirmations, but you should understand at certain levels, you don't necessarily need a confirmation. Now, if I'm trading puts at 412.60 and calls at 408 towards the more middle wide range, I would want more of a confirmation to enter at those levels, because they're not truly the best of this overall range and of this overall channel. So just understand these things, right? That's my overall thoughts on SPY. And again, 412.63 and 415.50, we're not going to get trapped. We get stopped out quick. Hit the next levels for puts. 408 and then 405.13 for calls, gap close reversal. And just understand, if it does not reverse at the gap, it's going to keep on going in the same direction it came from, filling the gap. There's actually two strategies. My favorite strategy is the gap close reversal, because the gap close reversal has the best risk to reward ratio. If SPY breaks above 415 and forms support, that's bullish, and it's going to go to 417. But if it doesn't do that, it's going to sell off. It has so much more downside potential than upside potential. But I respect the fact that if it's not having a gap close reversal, it's going to fill the gap and continue to go in the same direction. So SPY's going up to fill the gap, and it does not react as a resistance. It does not show reversal confirmations, which is something you should be using. How to confirm if a stock's having a reversal at your key level. Then it's just going to have a gap close and go, which means it's not going to have a reversal. It's just going to keep on going in the same direction it came from, filling the gap, which was up, right? So when you see that, you must respect it and cut your loss, or just sit out if you're not in the trade, right? If SPY's having a gap close and go, would you buy calls? Me personally, it depends on the confirmation. It depends on the level. Obviously, it wouldn't be a great risk to reward ratio because it's at the high end of the channel. I don't just buy it because something's confirmed bullish or looks bullish. I go off of price as well and risk to reward, right? But just don't do anything blindly, and understand the trade that you're getting in, and understand there's two strategies. There's a gap close reversal, and then there's a gap close and go, which just means, it goes in the same direction it came from, filling the gap, and it does not have a reversal. And it is your job to determine which one it's going to be. And then once you determine which one it's going to be based off of confirmations and reactions to that level, you need to decide if you're going to enter a trade or sit out, right? If it reacted bullish at 415 and it looks great, you need to decide, do you want a good risk to reward and just sit out, don't do anything? Or do you not care about the best risk to reward? And you just want to get in, get out really, really quickly, try to scalp the top? Me personally, I don't like that type of strategy, but you need to be able to confirm and see that reaction, right? But just understand, it's going to be a very, very simple week. We're going to be targeting puts at 415.50 and 412.60, and we're going to be targeting calls at 408 and 405.13, right? So other than that, that's just the main trade analysis. Now, I'm going to give you a quick breakdown sheet. So I gave you the levels where we're interested in trading gap close reversals, but you, again, must be able to understand and see if it's going to have a gap close and go, and then decide if you're going to trade that gap close and go or not trade at all. I would encourage you to sway away from gap close and goes, especially if they're at poor risk to return ratios. But anyways, let's go over the key. So we went over our key levels, the 4 key levels, 2 for puts, 2 for calls. Now let's go over the price breakdown sheet. So this is just support and resistance levels, right? So basically these levels that I give you, if one of them reacts as support it's going to break out above to the next level. If one of them reacts as a resistance, it's going to break down below to the next level. And we're going to update this every single day. So we'll start off with this one. So 415.50, this is our best level for puts. If it breaks below that, then overall, we will go to 414. So 414 would be the next level. If we break below 414, we go to 412.60. If we break below 412.60, we go to right here, 411.60. If we break below 411.60, we go to right here, 410.20. If we break below 410.20, we go to right here, bigger drop, $408. If we break below 408, we go to overall nice pullback to 406.70, and then if we go into that, 405. So those are going to be our overall support and resistance range, right? Now let's work it from the upwards. So if 405 holds, we go to 406.90. Break above 406.90, we go to 408. Break above 408, we go to 410. Break above 410, 411.60, 412.60, 414, 415. So basically the point of that is just you can write that down, and if you see one of those levels react as a resistance, then it's just supposed to drop to the next level, not to the second level, not to the third. You just play at one level, right? And if one of those levels reacts as a floor, as a support, then it spikes up to the next level, right? But that will give you the overall estimation of where SPY is going to be heading if it reacts to support or reacts as a resistance level. That way you know what you're getting yourself into. If you went short at 412.60, you know the next support level would be 411.60. So you lock in your gains right around there. If it cracks 411.60, then you know it goes to 410. That's the next support level. If it breaks above 410, then you know it goes to 411.60. It breaks above 411.60, then you know. So mark all that out. You can mark all that out on your charts. Look, I'll show you how I break this down. I personally use it with the 30-minute. You can use it with the 5-minute and the 1-minute as well. But basically, if one of these lines that I'm going to draw reacts as a resistance level, it goes down to the next level. If one of these lines reacts to support level, then it goes up to the next level, right? So we have 415.50, we have 414. See how I'm marking this out overall, right? And then we have 412.60, right? That's where it started to, go right here when it rejected that. And then our next level would be 411.60, $1 drop after that. And then our next level, $410. Then our next level, $408. And then our next level, $406.90. And then below that, 405, right? So just notice how some levels are wider than others. That's very important for your trade. That you're then going to know, oh, wow, a bigger bull and bear trap was created here, right? Notice how some of these zones are wider, right? So you need to be aware of that. Tight zone, wide zone, right? The wide zones are going to have better risk to reward ratios, right? Bigger traps. Be aware of the higher levels and the lower levels. But these are all the levels, and the ones that I'm interested in trading at are 415.50 and 412.60 for puts, and then 408 and then 405 for calls. And then obviously without confirmation, and then in terms of speaking in advance, puts at 415 would be the best price. I think it could be 412.60 personally, but looking at the chart, 415.50, based off what the charts tell me, it could be 412.60. And then obviously for calls, 405 would be the best price without confirmation. Trade the best setups at the best prices. The other levels are not the best setups. They're not the best prices. That's just for you to be aware of where the price will be fluctuating. If it reacts as a resistance or support, where we'll go to the next level. With that being said, if you want to be a part of Traders Society, it's going to be the first link down below in the description. It's a one-time fee. You get lifetime access to everything. You get lifetime access to the moderators in the chat who can help assist you with trading, professional scalpers, professional day traders. We have millionaires within the program. We have multiple people who are making consistent 5 figures every single week. If you want to surround yourself with the right team, with the right strategies for trading stocks, for trading options, for mastering the SPY. That's what we do. We focus on the SPY. It has the most liquidity. It's the most lucrative. It's the most rewarding. It's the best one to be trading. And we found it to be extremely predictable. It's going to be the first link down below in the description. One-time fee, lifetime access to the video lesson library, to the course, to the trading system that I've created, to the unique gap trading, price action trading strategies, to the chat room, the Discord server, the live trading streams, the voice channels, the moderators, the chat access, all my real-time trade alerts, and the moderators' real-time trade alerts as well. There's so much more to it. If you want to check it out, it's the first link down below in the description. It's a one-time fee. It's a lifetime access, man. Look, SPY is highly predictable, man. If you guys have been taking advantage of my video lessons on what I teach with these, you should have been in calls when we alerted calls on Friday within the Discord. We had Mohammed called this out. I called this out as well. The bullish hammer. Look at this, man. Look at this. So right here, look at the hammer. You see this bullish hammer on the 30-minute? That's very, very bullish. And then it was a smooth uptrend ever since that hammer formed, right? This is bullish, right? But you need to understand, just because a candlestick is bullish doesn't mean it's going to actually be bullish. Understand where that candlestick is forming within the chart. So look at this. You have all of this support at 410. See all the support at 410.30? Look, when it bombs at 410.30, it exploded up to 414. You see that? Well, when there was no support, no bottom wicks, no bullish candles, what did it do? It was just red and bearish. It cracked. It got wrecked. But look right here. It broke above 410, which doesn't mean it's bullish. It's just breaking out, but it broke above it. Had a nice breakout. Then it pulled back and it bombed at 410.30, bombed at this support, bullish hammer. What did it do last time? It exploded up to 414 the same day. What did it do on Friday? The same exact thing after that bullish candlestick. It exploded up. So remember that strategy that we teach. Wait for a stock to break out. So this is your support. 410.30 is support. You can see when it reacts as a resistance, it's get crushed. When it reacts as support, it explodes up to 414, right? It had a breakout above a support level. It used to be support. It reacted as a resistance level, right? But it had a breakout. That doesn't mean it's bullish. Now, if it pulls back, and you want a massive breakout when doing this, if it pulls back and retest that breakout level and that support level at 410.30, and it forms a bullish candlestick on the 30-minute, this is a nice bullish 30-minute hammer. This candlestick works over 70% of the time. It's by far one of my favorite 30-minute candles, right? So it had a breakout. It pulled back, which is a healthy pullback because it bottomed that previous support and it formed a bullish 30-minute hammer. When you see that hammer close, it's hammer time. Write that down. Know when it's hammer time. Stock breaks out, pulls back to the previous bear trap level where it had its breakout, and you want a big breakout before that. And then it forms a bullish hammer on the 30-minute, smooth uptrend. Is it surprising that it went to 414? No, not at all. Why? Because that's what it did last time. Last time it bottomed at 410, it went to 414, right? So very, very simple. And we took advantage of those calls, folks. If you didn't catch that, man, I don't know what it is that you guys are doing. This is highly predictable stuff. Wait for the stock to break out. Wait for the stock to break out. Wait for it to pull back. Wait for it to pull back. When it forms the bullish 30-minute hammer at the previous breakout level, at the previous resistance right here, buy into the closing of that candle, the opening of the next one, and then watch it trend up. Watch it trend up. Sell into the resistance, sell into the resistance. Look, man, if you want to be a part of Trader Society, we're teaching this daily. We're calling this out live daily. We're trading daily, right? If you want to consistently make money within the stock market, this would be your best chance with our group. It's going to be the first link down below in the description. I will see you guys tomorrow at Market Open.